Hello, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Friday, July 18, 2008. Australian import prices rose 1.4% in the second quarter, lower than forecasted. Export prices climbed 13.5%. Since demand for Australia's natural resources is looking resilient, these results should improve the balance of trade for the economy, as the rise in commodity prices will boost exports. The Aussie traded very flat against the greenback, but reached a new 9-month high against the yen. The pair is up 230 pips since hitting a low on Wednesday. Stronger exports are expected to keep up, helping that sector of the economy. Though stocks in Asian markets were mixed, risk appetite was in effect overnight, helping carry trade. Germany continues to face rising inflation at the producer level. Prices were up 0.9% on the month and reached the 26-year annual pace of 6.7%. A higher oil bill is causing producers of raw materials to pass along more of the cost to other firms and consumers. Inflation is expected to keep climbing even as the economy cools, putting pressure on the ECB. The Eurozone trade balance showed a 1.5 billion euro deficit, surprising forecasts on the downside. Exports were down 3.4% as global growth cools and the exports to the US continue to fall. A higher euro is also making European-made goods more expensive abroad. Now, in addition to faltering domestic demand, the Eurozone has to deal with a weakening balance of trade. In the UK, the government borrowed £9.2 billion in June, $2.9 billion higher than June of 2007. The budget deficit swelled to £24.4 billion in the 3 months to June, the widest since records started 50 years ago. The government is now close to breaking its rule to keep debt below 40% of GDP and will have to rewrite its borrowing rules, unless it wants to increase taxes, an unpopular move with the economy on the brink of recession. The pound was pressured following the news, hitting a session low near 1.9910. It did manage to recover and was heading back towards the 2-to-1 level as of 12 p.m. Eastern. The last 3 sessions have seen ranging trading after a big jump to start the week, and therefore the pound is set to finish higher overall. The dollar-yen pair held on to yesterday's gains in today's session. European stocks were higher, helping to boost risk appetite overnight. In New York session, Citigroup posted a smaller than expected loss, while Merrill Lynch disappointed investors. The dollar has paired all the losses sustained in the first half of the week. In Canada, wholesale sales were up 1.6%, beating forecasts on the upside. The climb came as a result of better sales of agricultural chemical products. It is the 4th gain in the last 5 months, and 6 out of 7 sectors reported positive growth. In a second release, the leading index was unchanged in June after increasing 0.2% in May. Both new orders for manufactured goods and the housing index turned down, while household spending remained the driving force behind growth. The US dollar-Canadian dollar pair traded above parity today following yesterday's late climb. Prior to the New York Open, the loonie made some marginal gains but gave them back in New York trading. The pair is likely to end the week trading near 1.0050 after falling below the 1-to-1 level midweek. Support in the way of double bottom was apparent at the 0.9980 level. Some upcoming releases to start next week include producer and consumer prices from Australia and retail sales from Canada. On Wednesday, the Bank of England releases its minutes, and the Reserve Bank of New Zealand decides on interest rates. And that wraps it up for the day in Forex News. Join us again right here at cmsfx.com.